ICT's unicorn model is the most powerful algorithmic entry model that you can use. I personally have been using the unicorn entry model in my trading recently, and the results have been insane. So today we're going to be talking about ICT's unicorn model. Before we get into the video, if you guys are struggling to be profitable and you're looking for a mentor, I just announced the official waitlist for my personal private mentorship group where I will be teaching you guys and guiding you personally to consistent profitability. I'm really looking to build a group of killers, consistently profitable traders, self-sufficient traders, not no signals, no codependency. I want you guys to be consistently profitable with your own trade ideas. The saying goes, you feed a man a fish and he eats for a night. You teach a man to fish and he eats for a lifetime. In this group, I'm going to teach you guys to fish. So just to rapid fire list some things off that you will get if you join my private mentorship group. You will get full direct access to me as your mentor, live trading 3 times per week, daily bias, analysis, watch list, and forecasts, a full trading dashboard on Notion that you guys can use every single day to journal, to document the news. It's a full dashboard with everything that you need for your trading. And this is the craziest part. I really wanted to make sure that I over-delivered on value. So what I've decided to do is create a full course, a full curriculum, and add it to the mentorship completely free. People charge $350, $400, $500 for their courses. I'm including it with my mentorship completely free. It's called Profitability Unlocked, and it's going to guide you step by step, A to Z, on how to become consistently profitable. I've even decided I want to give you guys a discount code because I'm so excited to announce this private group. So for the first 100 people that join the waitlist that is linked right at the top of the description down below, you will receive a discount code at launch that you can take advantage of. We're only sending that discount code to the first 100 people on the waitlist. I can't wait to see you guys in there and help you level up your trading. So make sure you go down below, click the link at the top of the description, and lock in your spot. But with that being said, let's talk about the unicorns. The unicorn model consists of 3 main components: time, a breaker block, and a fair value gap. The first component is time. Time is always the most important. It's always time and then price. We want to be utilizing unicorns within ICT's kill zones, and more preferably at kill zone open times like London Open or New York Open. I personally use 9:30 equities open on ES and NQ to look for unicorns. Time provides volatility injection for price so it can have the energy to get where it wants to go. Without time, price will often be lethargic, it will consolidate, and it will just be sloppy price action. You'll understand where the draw is going, but it's almost like it lacks the energy to get there. The next component is a breaker block. Before we understand breakers, we must first understand how the market turns. The market only turns in 2 ways: breaker swings or failure swings. Breaker swings take liquidity before turning, which is a breaker block. Failure swings fail to take that liquidity before turning, which are a mitigation block. Both breaker swing points and failure swing points act as mitigation areas for smart money. When we're looking for unicorns, we are purely focused on breaker swings. We mark a breaker block using the last up close or down close candles or series of up close or down close candles prior to an old high or low being swept. So that might sound confusing, but hear me out and let me elaborate. A bullish breaker block is the highest up close candle or series of up close candles prior to an old low being swept. When price breaks through this high and then returns to it, smart money will look to mitigate their orders, causing this area to act as support. A bearish breaker block is the lowest down close candle or series of down close candles prior to an old high being swept. When price breaks through this low and then returns to it, smart money will look to mitigate their orders, causing this area to act as resistance. The third and final component of unicorns is fair value gaps. A fair value gap is a 3-candle formation that occurs during significant price movements. These significant price movements create an imbalance of buyers or sellers, resulting in a gap in price. Price will want to return to these gaps, aka imbalances, to offer fair value. We mark a fair value gap by marking out the gap that occurs within these 3 candles. A bullish fair value gap is simply a 3-candle formation that occurs when there is an imbalance of buyers in the market. This is often also called a BISI, a buy-side imbalance, sell-side inefficiency. A bearish fair value gap is a 3-candle formation that occurs when there is an imbalance of sellers within the market. This is often also referred to as a SIBI, which is a sell-side imbalance, buy-side inefficiency. So there's an imbalance of sellers within the market and there's an inefficient amount of buyers within the market. Now that we understand these 3 main components, let's put them all together to understand what a unicorn is. A bullish unicorn is a bullish breaker block that occurs at a higher time frame discount array with a bullish fair value gap that forms inside of it. A bearish unicorn is a bearish breaker block that occurs at a higher time frame premium array with a bearish fair value gap that forms inside of it. We only want to be using these unicorns at opening times. I want to make this very clear. A unicorn is not valid unless the fair value gap forms inside of the breaker block. It needs to align with the breaker block. Unicorns are extremely powerful, but they're best when used at kill zone open times and when paired with narrative and draw on liquidity. Combine the unicorn model with higher time frame narrative and draw on liquidity, and you have an extremely profitable model on your hands that can be delivering winning setups every single day. Here is a unicorn checklist for you guys to make sure that every single trade that you're taking is actually a unicorn. It needs to occur at a kill zone opening time. I personally use 9:30 equities open and trade ES and NQ. It must occur at a higher time frame PD array. Price is fractal, so your higher time frame PD array could be a 1 hour, it could be a 4 hour PD array, it could even be a 15-minute PD array if you're trading off the 1 minute. There must be a breaker block that forms at that higher time frame PD array, and then there must be a fair value gap that forms within that breaker block. It must meet all 4 of those requirements for it to be a valid unicorn setup. With that being said, let's hop over to the charts right now, and I will show you guys some personal trades that I took just this last week using the unicorn entry model. All right, so now that we're on the charts, we can look at a very recent trade that I took just this last week on ES using this unicorn entry model. What you can see from the top down on the weekly is we have a draw towards internal liquidity, which is this bullish fair value gap right here. So I'm looking for lower prices. I'm looking for the 1 hour and 4 hour to shift state of delivery, point towards this weekly fair value gap lower, and just confirm bearish prices. So with this indices model, I only trade ES and NQ, and I only operate within 8 to 12. You can trade ES and NQ during PM session. I just personally don't. I only operate within 8 to 12. So we drop into the 1 hour here. As you can see, we head lower towards that weekly gap. The 1 hour has clearly changed state of delivery, right? This is a very clear shift in order flow on the 1 hour. It's now pointing towards that weekly gap that I marked out. Now, we just want to mark out, for the sake of making things clearer and easier, 8 to 12. This is the kill zone that I operate within. What you can see is we have this 1 hour gap here and this 1 hour gap right here. We've already stung into. So if we drop into the 5 minute, what you can see here is we've stung into that 1 hour fair value gap, that higher time frame PD array that I'm looking for. And now all I'm looking for is for price to sweep a high and then create a fair value gap within the breaker block. So I just took that back, to make this a bit more obvious. We have this swing high right here. Again, with a unicorn, all we're looking for is a bearish breaker block because we're looking for lower prices. We're looking for a short. So we're looking for a bearish breaker block, which is a sweep of an old high. This swing high right here is an old high. And then we're looking for a fair value gap to form within that breaker block. So we look for a sweep of this old high, which we get right here. Price ends up sweeping that high and heading lower. Whether you use changes in state of delivery, whether you use market structure shifts, ST, whatever, it doesn't matter. I talked about that in my last video. But the point here is we've swept that old high. Now we have this breaker block. There's only 2 ways the market turns. The market turned using a breaker at this point. So we have the breaker right here. I'm going to just mark it with BB. Now we're looking for a fair value gap to form within this box that I just marked. So because there's 2 consecutive down close candles here, I'm marking them both using the wicks, the entire candle. So this entire box here is the breaker block. Now I'm looking for a fair value gap to form aligned with it. What we can see is the fair value gap now forms on the close of this 5 minute candle. So now we have a beautifully aligned fair value gap within that bearish breaker block. All I do is set my order at the breaker block. I cover the breaker block and I target 2R lower. That's literally it. That's all I do. It really can be that simple. And I don't know why people make it more difficult than this. I really don't. So it either hits my stop loss or it hits my target. I took this trade live. I can show you the executions. I'll let you guys take my word for it, but I posted it on Twitter. So if you really want to go, fact check me and see if I actually took the trade, it shows my executions on Twitter. So you know that I'm not a fraud. But anyways, tags us in right here. Target 2R within the range.
slow choppy delivery throughout 8 to 12, but it ultimately did deliver, and we took this trade. I think this was live on stream. I took that trade in a live stream. So that's one perfect example of how to use unicorns. And all you're really doing is establishing a clear draw on liquidity from the higher time frame, looking for a higher time frame PD array in the direction of that draw on liquidity, and then trading the unicorn entry model in that direction.
If you guys found this video insightful or valuable, all I ask is that you go down below, subscribe, like, engage with the video, whatever. It lets the algorithm know that I'm doing something right, and it'll be more inclined to push my content. So that would be amazing if you guys could do that for me, and it takes less than 10 seconds. I would love to see you guys in my private mentorship group, my private server. If you want to join, the waitlist is right down below at the top of the description. If you guys want to learn about market maker models, I humbly do think that that is the best video on MMXM on YouTube. So I highly recommend you guys go watch this video next if you haven't seen it already. And with that being said, that's really it for this video. I hope that you guys did enjoy. I'm trading patiently. I'm out. Peace.